U.S. dollar is mixed after the release of trade figures. The U.S. trade deficit spiked to a five-year high in January. The trade deficit rose by 9.6% to $48.5 billion in January from a revised $44.3 billion in December of last year. Now, the wider deficit was led by a 2.3% increase in imports of consumer goods. And overseas, the main news was in the form of disappointing German factory orders. The decline of 7.4% was the largest since January 2009. And in China, foreign exchange reserves rebounded unexpectedly from a six-year low in February. Meanwhile, the RBA met and, as widely expected, left policy unchanged. In addition, the rise in the metals was seen as a supportive factor, and Aussie is up over 0.25% against the U.S. currency in morning trade. Meanwhile, the British pound extended losses amid renewed political uncertainty over the UK's plan to exit the EU. In other foreign exchange pairs, euro-dollar is down 0.1% in New York morning trade at 1.0564, while the pound against the U.S. currency is off by 0.3% at 1.2191. Dollar-yen is up about 0.25% at 114.13. The currency pair in focus this morning is the pound against the yen. Now that cross is bearish and capped by declining trendline. The RSI also shows downside momentum. Short positions are preferred below 139.70 with targets at 138.90 and 138.50 in extension. In precious metals, gold and silver futures are bearish. Gold is consolidating on the downside, and short positions are preferred below 1230.50 with targets at 1222.50 and 1219 in extension. Silver is down over 1%, off by 1.1% at $17.57. And that does wrap it up for this morning. I'm Remy Blair reporting for the New York Stock Exchange. Make sure to follow us on Twitter at Trading Central. Have a great day.